Okay, we are recording. Welcome, everybody. My name is Emmanuel, and I work for EBAN, the European Business Angels Network, and I want to welcome everybody for this great webinar with Audra Shallal, founder and managing director of Boss Consulting and EBAN board member, also an NFBAN board member, and BADGA board member. So this webinar is about how to craft a killer pitch. So what makes a business pitch effective? And Audra, I leave you the floor and welcome.
Okay, thank you, Emmanuel. Okay, good morning, and it's great to be here. I hear that many of you are preparing your pitches. So we're going to go through quickly what are the elements to make a great 1-minute elevator pitch, and then also for your 10-minute blitz. Just to go very quickly, I go full circle in entrepreneurship because I'm an entrepreneur myself, but also a business angel investor to be able to also understand the demand and supply side. And that's where I sit on several boards of the business angel networks, as Emmanuel had mentioned. And I also am an expert advisor in advising international organizations such as European Commission, United Nations, and OECD on reinforcing entrepreneurial ecosystems, particularly in the EMEA region, on bringing together different stakeholders in the public, private, government, academia, and thus giving recommendations to policymakers and ministers to put in certain policies to help facilitate entrepreneurs and the whole entrepreneurial ecosystem. I'm a mentor for several accelerators and incubators, and have put in several mentoring programs with universities, particularly engineering schools, because of combining the innovation with management. And do quite a bit of pitch training with different organizations and Open Accelerator, the camp, and Tech Tour, and as an active board member with EBAN with their different initiatives. So first, I'd like, if some of you here would, because I want to ask some of you a few questions for you to answer. So first is, I want to ask you, what is the purpose of an elevator pitch? Why even have one? What makes you think that, what is the main objective of an elevator pitch? I'm curious to hear what one or two people feel. Feel free to take off the microphone and tell me what you think. Anybody?
Maybe in the chat. I think we have a shy audience. Okay.
Yeah, well, okay. I will break the ice. So I'm Joseph, and I think that the elevator pitch is great to explain in very short time for unexpected events, your product, your service, yourself, to leverage the opportunity that you might find unexpectedly or expectedly.
Right. So what do you feel is the purpose? Like, why are we doing this short pitch about our company? What do you think is the main purpose? Like for you, what's the main purpose for you?
Well, to introduce yourself, to introduce your product in a very concise manner, so that others can learn quickly whether it could be interesting to have a longer meeting or not.
Okay, right. So it's basically for you, it's to be able to arouse interest. So but even more than that, to be able to encourage someone to want to have an appointment with you to know more. Yes, Joseph?
Yes.
Okay.
Yes.
Yes, because why I'm asking this in the beginning, it's very important because even for entrepreneurs or serial entrepreneurs or those who are even scaling up their businesses, many tend to forget, especially in the biotech, health tech, and more high-tech companies, is that many entrepreneurs tend to forget the main objective. and mission of what an elevator pitch is all about, because it's not just advertising yourself or gathering interest. That's just not enough, because investors can be interested, but they're not going to go any further. So you have to remember always that the main objective of your pitch is to motivate the audience to act, is to motivate your audience to act, you know, whether it's for an appointment, whether someone wanting to go further to decide whether to invest in your company, whether they're interested in taking part in your management team, depending on, you know, who you're pitching to. But the most important is motivating your audience to act. And sometimes we tend to move away from the actual objective, and that's where some get very involved in just the technology and not actually the whole aspects of the business, or get more focused on other aspects of the company rather than the main objective of what you're trying to attract the right attention from, whether they're shareholders, investors, clients, you know, media, partners. This is where it's important, because again, if just arousing interest, you know, you can get someone that just nods politely and says, yes, very interesting. And that's where you have to be very careful, because that's where it gives you the red flag to know that, okay, something in my pitch wasn't effective enough, because he's just saying it's interesting, but not going any further. There, in the elements of an elevator pitch, okay, is basically, you know, you have 60 seconds, and actually it's not 60 seconds can be an eternity. It's not short if you are properly prepared. There are 5 things in an elevator pitch, and I always focus, as I said, on, you know, those who are just starting their companies, those who are serial entrepreneurs, to bring back to the basics in order to be more effective, is that there are 5 elements in an elevator pitch. And those are basically, to give you a hint, the 5 W's. So can somebody tell me what they think the 5 W's in an elevator pitch is?
I'd say what, who, where, why, and I'm missing one.
What, who, where, why, yes, and?
When?
Yes, okay. Who's behind the idea? What is the idea? Where is the marketing opportunity? When, how long does it take to get to the finishing line? And why? Now, why is why so important? Why do you think why is most important in the 5 elements of the pitch? And actually it's this is the one that is the most important in how you clench the curiosity and interest.
If there is no why, there is no money coming.
Yes, and why is there no money coming?
If you are talking to investors, if you are not able to convince them why your idea is great and makes impact, they will not be interested in any in learning about who you are or when did you start or any of the other things.
Yes. Okay. So what you're telling me more at the end is basically more on the reason why is so important. Why is like, why do I care? Why am I excited? It's the passion. And many entrepreneurs say, well, how do I show passion? But passion is basically your storytelling. You know, it's like, just like you were saying, Mohammed, towards the end about, you know, why you even started, why is this company so important to you? Because for us as investors, as we're investing in the team, you know, we always say, do you invest in the jockey? Do you invest in the horse? And many, you know, say, oh, well, definitely, you know, we invest in the horse. But actually, no, we invest in the jockey, because a horse, you could have a really top bred horse. You could have a really great breed, but when the horse race, when you're getting towards the end, it's actually who's the jockey was that best strategy to accelerate that horse to make it to the finishing line before the others. So when we say, team and, and why I care, that is important on the part of the passion. You're basically selling them on the why. And why did we not mention how? Why is how not part of the 5 elements of a pitch, of the elevator pitch?
Because it's a follow-up meeting.
Yes, more basically, it's how is too long than 60 seconds, because going into, how you're making money, going into more detail about the business. And that's where that actually in your elevator pitch, if someone starts asking you, well, how does that work exactly? How did you accomplish this? Or how does that technology, how is this technology more innovative than other? This is where that you've actually also accomplished what you wanted in your 1 minute, because that's where you're arousing more interest, someone to want to take an appointment to know more. So how is too long in an elevator pitch, but that's usually in the how is when you'll be in your 5 minute, 7 minute, 10 minute pitches. Now, I remember, I think it was Mohammed that was saying, it's about, convincing also investors on the why. The thing is, yes and no. If it's all about convincing, then why are you even here pitching? Because you shouldn't feel that you have to convince entrepreneurs. I know that lately, as I was listening this year, as a jury member or sometimes as a coach to different pitching events or dry runs, is that many entrepreneurs sometimes feeling that they have to convince. How do I know as an investor that they're trying to convince me? Is that it's over-explaining their product, over-explaining the solution to the problem. We'll talk about later about the 10-minute presentation, but the thing to be careful is that I've noticed that a lot of entrepreneurs have lost a lot of time in the beginning of their presentation because they feel so much that they have to convince their target audience that they definitely have a solution to this problem. And the thing is that if you effectively show where the problem is and the solution that you have, and where this innovative technology is, and the value proposition behind it, you don't have to go into more minutes to waste on those aspects, which then takes away from the more important other elements in your 10-minute presentation. So always be careful with that when explaining the solution to your problem, is that not to feel that you have to give so many examples and so many reasons for why this is the right solution. Sometimes it could actually diminish the effectiveness of something that's more short, concise, and to the point. Also, just to elaborate also, is that to be very careful also, like within your pitch, is that investors they don't like to be in the passenger seat. They're very active. They like to take action. So make sure that when giving your pitch, that you're not making it sound a bit like a list or a laundry list of the things that are important about your company. Don't use too many adjectives, because also sometimes we tend to say, oh, it's extremely important, oh, it's revolutionary, and we hear a lot of these type of words all the time. So then it actually takes away from the originality and uniqueness of your pitch. As an example, is that at the time when everybody was flying before this whole COVID pandemic, is that I remember sitting on the airplane, and the flight stewardess was saying, please be very careful in the overhead bins because it is extremely full. And I was thinking, extremely full? How can you be fuller than full? I mean, full is full. It's full. Extremely full. So we tend to sometimes, again, by wanting to make our company sound more original, more perfect. We tend to want to use more, and describing our product, more adjectives, more descriptive, but sometimes it takes away, again, like I said, by overshooting it, then it just using a few specific words. So that I know you guys understand when I say the real objective of an elevator pitch is that basically, for example, which is similar to an elevator pitch, is a movie trailer. So a trailer is like 100 to 120 seconds. What do you think is the objective of a movie trailer? You know, when you're going to the movie cinema, also that at a time when everybody was going to the cinema before this pandemic, but when we would see 3 or 4 movies that were about to come out, what is the objective of a movie trailer?
To raise interest, and so that the person thinks that he has to watch this movie.
Okay. But again, you see, when I was saying what is the real objective, is it just about arousing interest?
Maybe it is also about giving a quick intro about what the film will be about, so what you can expect when you watch the film. Yes,
so you see, like just like in an elevator pitch, where we want to give all of the main aspects of your business in a short amount of time, is the same as in the movie trailer. They want to show you all the best parts of the movie so that you want to go see the movie. But the main objective actually of the movie trailer is that it's not for those in the audience that are going to come, that they want to get them interested to want to come to the movie within the movie theater. Actually, they want you to go out and tell people like, oh, hey, there's a sequel to Liam Neeson's movie Taken 2. I can't wait to see it. Oh, really? There's a sequel? Oh, I didn't know it was coming out. When is that? When is that coming out? And then the next person. So for them, the objective is to get as many potential viewers to come as possible. So for them, it's about you going out and telling other people about the movie. So that's something I want you to leave you with, to remember again about, you know, that you want to motivate your audience to act, that, you know, like what the real purpose of your objective is. And that's what makes it important within the elements of your pitch, because whether you're looking for bringing in a new team member, whether you're bringing in investors, you know, even business angels are very different from VCs, to a crowdfunding campaign. So you have to definitely know how you are targeting this audience, and how and the type of elements they need to hear. You know, just like a bank, it's about payback. For an investor, it's about ROI, return on investment. Also, to remind you too that we tend to sometimes talk in percentages in a pitch. If we want to show, you know, the part of the market that we have within our, you know, company, is better to talk in numbers, because sometimes you will have investors that are not specialists in the sector that could be potential investors. But by saying percentage, they don't exactly know what percentage of the share if they're not very familiar with the sector. So by numbers, it's more effective for one to understand. Also, to remember also too that there are like 3 different types of audience, in the fact that there's one, you know, more visionary, another on the visual, another on the sensory, and the other on the digital. And you have to make sure that you're catering to these 3 different type audience in order to get everyone's attention, because some are more visual, where they like to see slides, they like to be able to follow along. It's easier for them to be able to absorb the information and catch. But then you have also others that are more on the digital, and where it's also on, where they want to kind of see the prototype, they want to touch and feel. That's on the sensory of the audience, that they, for example, that's something also to let you know, is that when you're giving your 1-minute pitch, is that if you do have your prototype or not, don't ever give it to investors in the beginning. Always give it at the end, when they're give their question and answer, even for your 10-minute presentation, because that's where many investors get distracted looking at the prototype and not actually listening to you and your pitch. So it's more effective that they listen. You got them interested and also wanting to know more, and then they can see the prototype. Also, in your elevator pitch, sometimes too, what's good is when you want to set yourself apart from others, because sometimes you can be in these pitching events where you're giving a 1-minute pitch and you have like 30 entrepreneurs pitching that same evening. So what makes also an investor be able to grab you out of the crowd of entrepreneurs, and that's where sometimes is that if you do have something that whether it's like a t-shirt or something that kind of sets you apart, that kind of reminds someone about the logo, or that reflects the company, it's always good to do so, because it sets. Just to give you an example, I was on the jury for an event, an entrepreneurship event, and there was like 30 entrepreneurs giving their pitches, and this one sector that when they were having like 10 people in a particular in the biotech sector, I was like on the jury for ICT, so I wasn't as focused, even though I invest in the health tech also, but I wasn't as focused on those pitches. But one came in and said, hi, you see my hands here? You see my hands here? He says, look, we're using this antiseptic gel, and there's a lot of side effects that cause cancer and this and that, and they're being used in hospitals and clinics and all. So I've come up with this gel that has no side effects, but also is antibacterial, etc. And that can be used in hospitals, clinics, and all. And I remember, like, because just by doing the hands thing, I remember that when it was lunch break, I'm like walking and I see the guy who was with the hands, and I was like, hey, the hands guy. I was like, how are you? I was like, tell me a little bit more, because it's interesting about, the gel and all this. And I got more interested in the product, but it was just also something that I was able to connect. I remembered, his hands. So something even as little as that, is something that sets you apart from the others. Just to also, I'll show you this elevator pitch formula. Is that I give this to my entrepreneurs, my students, entrepreneurs in accelerators, incubators, even serial entrepreneurs, because sometimes when I'm saying serial entrepreneurs is that, when they've started up their companies and have, pitched quite a few events for one of their companies and moving on to another, is that sometimes with the amount of coaching, mentoring, or different raising of money, we tend to sometimes get lost a bit in the DNA of our project. And that's where and that's where we can see as investors sometimes when something's not so clear, or you're not hitting those main elements that we want to hear, and it either gets diluted by going too much into the technical part and less on how the company's making money, on like where that unique sauce is. This is where I give this formula that really, it's great to always go back and perfect your pitch with in this formula, because it's almost like, you know, a sixth grader when the teacher's telling them, okay, fill in the blanks, you know, here. But the thing is, this really helps you by going back to the basics and making it simple, is by going back to this formula and then making it very simple and concise, and then adding a little bit in the beginning with your storytelling, and then at the end about you know, what your ask, because here I don't give the ask. What your ask is, you know, what whether you know, it's for investment, whether you're looking for a strategic partner, a new team member, that is what your pitch ends up being. But for example, for here for investment is, what is your ask, you know, how much investment are you looking for, and the usage of those funds for how much percentage in the company. But this is something good to work with, and I'd be happy that if anybody wants to send me their elevator pitch, you know, working on it, I can take a look at it. You can, Emmanuel can give you my email to take a look at it. But this is where it's important to remember, you know, who's behind the idea, what's the idea, when are you going to get to the finishing line, why is this so important, you know, what's in it for you, the investor, and also for you, why this company, because you see, we want to know that there's a lot of highs and lows when developing a company, and when you have those lows, they can be really low. So we want to know that you're going to be able to get through those difficult times. So this is where on the elevator pitch, I'll briefly give you an example. For example, one elevator pitch in private equity. For example, seekingcapital.com is changing the future of private equity investing. Private equity is a $100 billion a year market with over 400,000 entrepreneurs aggressively seeking capital at any given time. Seekingcapital.com offers entrepreneurs and investors an efficient and uniquely interactive method for obtaining or investing capital in pre-IPO companies. Seeking.capital is not an internet-only company, but supports its online community with local franchises in the United States and internationally. Our team has decades of experience in the securities industry, investment banking, private equity, and executive management. My partner and I have worked together side by side for several years, co-managing and running the entire internet operations of a publicly traded brokerage firm. Our competitors, such as XYZ Corporation and ABC Capital, have had much more success and was recently valued at $550 million despite severe limitations. Seekingcapital.com isn't just a listing or a matching service. We offer a community that breeds interaction, education, and discussion. We work with companies globally through all stages of funding and across all industries. We are anticipating this amount for this round to be used for employees building, increased office space, and marketing. And we have a compelling 2-page executive summary that we'd like to send to you. Can we get your address? So basically what it's showing is that it's showing, okay, what is the company, where is the, you know, the problem, and the solution, and the amazing technology that you have inside, you know, where the market is, and your sales, competitors, what are the financial milestones, and why this is a great investment opportunity. So these are the main specific elements you need within your pitch. For example, you know, also, let's see that, yes. So just to leave you to remember, you know, also is your secret sauce. When we're talking secret sauce, it's like, what is your competitive advantage? And when I'm going to talk to you more about your, let me see what time it is. Okay. About your business pitch is, you know, your 10-minute slide is basically, you see your elevator pitch is basically like your executive summary to your business plan. And elevator pitch is, your is what's your, short summary for your business presentation. So of wanting to know more. So when talking about your business pitch, what's important again is that is really on having a clear statement on the pain and how your product addresses that. It's really like, we're not looking for aspirin, we're looking for morphine. We want to know that you have not just a temporary solution, that you definitely have a sustainable solution, that it's definitely something very effective. When giving your pitch, also like your 10-minute pitch, it's important that you remember also that your slides are telling a story, and the chronological order of your slides is very important. Now, sometimes there's a lot of entrepreneurs that say, okay, Audra, you say team is important. We're investing in the team. So I want to start my presentation with the team. But yes, team is important, but it's less effective in your presentation. And why I say this is because when you mention your team before you start talking about your business, is that we as investors, we hear, okay, there's 3 members on a team, there's specialists in this and this, but then we don't even know really much about the business, what the technology is, where that secret sauce, what your competitive advantage is. We don't know all this information in order for us to know if your team fits well for this company. So actually, the impact of showing that you got this great team is actually becoming less effective because we don't know your business yet. And then afterwards, knowing more about the business, we don't remember who was the CTO, who has all of the, do they have a scientific council with the right people, if it's some high health tech, biotech company. Where it's more effective is, again, when you're telling, okay, here's the problem, this is the pain, we got the solution behind it. This is where the value proposition is. This is the technology that make or service that is very innovative, and this is where we can take most of the market share. This is where the marketing opportunity is that after we know all of these main elements in the beginning, is that and where you also on your competitive landscape, where you have an advantage over other competitors, that's when we want to know that, okay, we see, they got a solution to this problem. It is a real big pain. We see that they got an innovative technology. They even got some good IP strategy. We see that they have a good market share where they can actually, even if they're not first mover, they can still be have quite a market share, that there's space. And we see that compared to other competitors, by the time some of these competitors will catch up, if we put some of our investment in, we'll be able to keep them ahead of the others. So, okay, who is behind this? And this is where it's important for us to know, okay, this is the perfect time where we want to know, okay, who is behind this? Who's on the team? Who is going to be able to execute this company? And that's where it becomes very effective to know if the right people are behind. And once we know the right people behind, that's when afterwards we want to know then that, okay, we got a great team behind this company. We see that they got a good competitive advantage, can have quite a bit of market share, that we see where the value proposition is and that secret sauce. So let's, is it feasible? Is it financially feasible? And this is where then we want to go into the finances to see, how great this investment opportunity can be. So going back, What I do want to say is that, again, as I was saying, when you're describing, the pain and how your product addresses that pain, and the solution behind it, make sure that you give a context, a bit of storytelling, and an impact, but again, don't stay too long on those introductory slides that will take you away from the other important elements. Now, where a lot of entrepreneurs also get into a pitfall, and I've noticed, is that whether I'm in the Middle East, Africa, the Nordics, or America, and being on so many jury events and pitch trainings, is that even savvy entrepreneurs, going on looking for their next round of financing, is that when they're actually even moving into their Series A, what is interesting to see is how two things end up not coming out in their presentations. And even though they know it's important, they tend to minimize it in their presentation. And even now, as I'm telling you what to focus and what's most important, half of you are going to still go to your pitch or dry runs and not put emphasis on the two aspects. And then afterwards you'll say, oh yeah, I forgot to put that in, or oh, I didn't put too much attention on specific slides for that. So it's, again, the team. You would be surprised how many entrepreneurs, they were talking about all the different aspects of the business, but then didn't even mention the team, or they mentioned very quickly, that they have 2 or 3 members on the team and moved over it quickly. And the competition. Now, the competition is the big one. Everybody knows that, yes, okay, competition. But in most of the presentations I see, 95% of presentations, entrepreneurs tend to dilute the competition. Either they're not mentioning the competition, or they feel that when the question answers come, they can bring it up. But you see, to many investors, they feel that if it wasn't mentioned in the presentation, they feel that you don't know the importance of different aspects of giving a pitch. So they feel that you weren't ready and knowing what was important for investors to hear from the beginning. Competition is that even if you do not have direct competitors, you always have indirect. And why always the competition raises a flag, and why it's so important to investors, is because they want to see that you've done your homework, that they want to be able to see also that if they're not in the sector, or if they are in this sector, is they want to see how you are positioned compared to these other competitors, and how you differentiate, and where they can really see that secret sauce, and they can feel so-called convinced that that you really got an innovative product or service. So the best way with your competitive landscape is that it's good to put a competitive grid, and on your competitive grid to show compared to 2 or 3 other competitors what attributes you have on pricing, on different product specifications, etc., compared to these others. And by giving a grid and showing yes, no, yes, we have this, or low cost, high cost, this, we can see in one, it doesn't take much time in your presentation, but we can see very quickly in just 30 seconds where you differentiate. And then also what's always nice is a competitive matrix, is because that shows the positioning of all the different players on a more macro, whereas the grid is more micro, and showing more on the macro level of how you're positioned with all of these other players within the industry. And I will emphasize that really do not forget to have at least, 1 good slide, or 2 if you want to show more visual, the competitive matrix and the competitive grid. It really makes a big difference in your presentation. And entrepreneurs tend to still forget this, knowing how important. And the reason why sometimes forgetting, it's not actually forgetting, but sometimes it's actually because the entrepreneur hasn't been able to get enough research on it. And see, that's why it taps us that there's a red flag, that, you know, obviously there hasn't been enough research, or that you really understand, you know, where you sit within the market, and really where you can show that secret sauce, so that one can feel that really you have that extra leap ahead of the other competitors. So as we were saying that, you know, in your pitch, when you're giving your bit of your storytelling, again, when I say storytelling, it's important in the fact that I've had entrepreneurs, you know, give their presentations, and where they're moving into the Series A even, and they say that, well, you know, now that we're with VCs, they were saying, the VCs, that just go right to the bottom line. You know, we don't need to hear about how you came to start this company right now. It's more like you've already proven it. So now we're looking for the next round of financing. So what's important is, okay, how are you scaling up and all? But in fact, it ends up, even for investors later in stage, is that it still becomes important of, you know, why this company, where it originated from, why it's doing what it's doing, and all. It's basically almost like your mission. And this is where it becomes important, because that's what gives you the finishing line. That's what gives the vision. And that's why it's so important when we say, like, even in your elevator pitch, when, you know, when, how long is it take for you to get there? Actually, even for investors, when they're meeting with entrepreneurs for the first time, sometimes you may say, why are they asking about my valuation? Why are they even asking about my exit strategy? You know, I haven't even started, or, you know, we haven't even gotten to that stage yet. But actually, an investor that does good due diligence, he actually starts with the exit, because you see, remember, it takes two. It's not only you looking for the investment, but also, do you want that investor in your company? You want to make sure there's the right fit. And even for investor, you know, is this entrepreneur a right fit for you? Are you going to be as a, you know, a business angel is not just giving finance, they're also giving mentorship and helping with the strategy, and sharing their networks. That's why they're called business angels. You know, they're like your guardian angel. But you want to, on your entrepreneur side too, see if this angel is a good fit for you. And that's why you could have an angel that wants to invest, but he's thinking that he's looking to you, that you're going to make 20 times more, that, you know, okay, maybe it's Google who's going to take over, you know, the company and acquire they have this is where their vision is. And maybe you actually just want to be the reference of Germany or the reference of France, and you actually aren't thinking of going that big. You don't feel like being acquired. You just want to stay as well known in your market. And that's where then, you know, when developing a company, there can be not a good fit, because someone's expecting more ambition and things, and another entrepreneur, and where they see their company don't feel that it needs to go that far. And so that's where it's important in the beginning to know, like, exactly where your vision is and where you want to be. So in your pitch, your presentation pitch, what's important is that once, okay, as I repeat, you know, pain, solution, the value proposition behind it, you know, how you're making money, the business model. The business model is very important. That also, which I didn't mention earlier, the business model, you want to have a slide definitely on your business model and make it very clear how you're making money. Because a lot of the time, for example, I don't know if you remember, when before there were the, you know, we say in French, the VTCs, you know, all of the private drivers, you know, there was just taxis. Now, you know, Ubers and all the different companies. Well, at the time with in France, when there was the cab, there was Uber, private chauffeur. There's all these different companies that were actually coming to our networks, and many thought that they were the only ones that were coming with this, great idea, that bringing it to the market, and as competition to taxis. And but actually, we were getting the same amount of companies coming to us. But what made the difference was that we would see one that actually their revenue streams and the cost structure was much lower. The revenue streams were higher. We could see that that actually, we can make 5 times what was in the 10 times what was invested in the company, and they had more of a market share showing in their business plan than the 2 or 3 others. So you could, that's where it's important, your business model, because you could be, it's great. That's why, for example, there's trends, is that there's a need. And so you're going to have a lot of companies or entrepreneurs seeing that, hey, there's a need here, there's a pain point, we want to find a solution for it. They find one, but then there's many also who are targeting the same, group, same market. And so this is with similar product or services. So this is where the business model becomes important, and where investors then choose between. And that's why sometimes a lot of investors don't want to sign confidentiality agreements, because a lot of the time you have companies that are very similar, but it all depends really on the business model that makes the difference. So you want to make sure that you mention your business model within your pitch. But as I was saying, after you show how you make the money, your business model, and then you are showing your market share and marketing opportunity, and where your competitive landscape, showing that, okay, this is how we have an advantage over other competitors and how we're positioned, and this great team, is that when I'm also mentioning team, usually everyone knows that they want to hear that this is a complementary, dynamic, diversified team. And we hear this all the time too. What I think is great for you to make a little bit different is that if you give the traction of each of your team members, meaning that sometimes easier for those scaling up on a second round of financing, because you can already show the traction of what each team member has done up until now since the development of the business. But even at an early stage, it is good to be able to show that not just, that where they graduated from and, where they worked or what expertise they have, but what they've been doing within the company up until now. So, if you had someone that was like a chief marketing officer and in community management, and he was able to, by 10 times increase the amount of users and those like downloading the app, etc., showing this traction. This is what's even more interesting to investors, because they can see that, oh, since they've started this company, this is what they've been doing. And look what, this chief marketing officer or this CTO has been doing, already, second prototype, already knows what products they're going to diversify in the near future. So this is where you can make interesting team. But also remember, on your team, if you have a small team, it's always nice to have an advisory board, and that are basically like your mentors, but are experts, whether, like, for example, if you're in biotech, health techs, someone that's coming from a pharmaceutical industry or an important lab, this by also creating a scientific council, this is what gives extra credibility to your team. And that's the thing too, is that knowing that you may not have a lot of team members, you can show that, okay, we have a management gap, maybe we don't have a chief financial officer right away, but we do have on the advisory board someone, working with this financial company that is helping us at the moment. And once we'll be able to, and will be helping us until we fill that gap. So always also show where your management gap is, because that shows the for an investor, it shows that you know where you need the right team members and when, and if you are missing them, what you're going to be doing in the meantime. So that's very important on the team side. And after we see that, you know, that this team can carry it out, is that we want to see milestones. And it's important that to show, you know, when you started the company, you know, what IP, you know, what patents you have, when you've launched the product. It's important that we see these milestones, but not only your past, you know, milestones but your present and future milestones, because we want to see what you will be doing. And see, that's again, we want to see where your vision, where you want to go, and to see if it's coherent. So not only your milestones and the traction within your company, how you're developing it, but we're also going to want to see your financial milestones. So after hearing about your milestones on traction, is that then we want to know more about the finances, you know, is this feasible? And that's where also in your presentation, we want to see, which I'll show you here. We just want to see the main important key financials. A lot of the time, mostly your cash flow. Cash flow is king, as we always say, because you could have revenues, good sales turnover, but then you're have no cash, you know, like you burn through your cash, you know, you're in the red, but it could be having good revenue. So what's important is sometimes just the cash flow in your pitch, and your worst case scenario and best case scenario is more than enough to describe. Because also, again, for many, because depending on what countries you're coming from, I know that, you know, in Africa and parts of the Middle East, you have sometimes a lot of entrepreneurs that say that, well, you know, we can't develop the company unless we have the investment. So, you know, it's like a vicious cycle. You know, you don't get the investment, we can't develop the company. But the thing that needs to be understood, that a lot of American entrepreneurs and some European entrepreneurs understand better now, is that investors, especially like business angels, they're there to accelerate your development of your company. So they're not there to start it. So that's why we call about lean startup, is that you want to put in your love money, and sometimes if you have a product that could be good on crowdfunding, is that this is the way for you to move ahead in your with investment. But what's important is showing that in your investments is the short term, medium term, long term. And that when I'm saying accelerating, is that the business angel is there to help you, you know, gain more market share, to stay ahead of the competition, to help you move on to that next product, to keep you ahead of the game. But without their investment, that's where they're interested to know in a worst case scenario, is that you're still able to develop the company. You still will be moving forward, but at a much slower pace. So they know that, and that's what also convinces an investor, is that they see that, hey, you know, even if we don't invest, you know, they could do pretty well, but slow. But if actually we put some investment in, we're going to really be able to help them accelerate and jumpstart and reach those milestones at a much faster pace. So this is why I always say why the finishing line becomes important. I want to leave you quickly with a story. It's a bit of a success story in France. Is that I had two students of mine when I was giving a mini entrepreneurship program at Polytechnique in Paris, France. And their project was print, and print was where you attach to your smartphone. It's almost like a Polaroid, but smaller and more sleek, where you can print out photos right away from your phone wherever you are and share them with your friends. And it was called PRYNT Print. And as they were working on their project, they were giving their pitch, and I was helping them with their elevator pitch and all. And then they came to me and said, hey, you should be proud of us. We actually got, and these were the super business angels in France, Xavier Niel, Simoncini, and Grandjean, that are considered the super business angels in France, were saying that they want to invest, 200,000 euro. And I said, oh, really? Well, that's great. And I said, well, for how much equity? And they said, oh, 30%. And I said, 30% for 200,000 with what you've accomplished now, that's quite a lot. And they said, yeah, but they got a good network, like you said, they're going to give mentorship. And I said, yes, but they're also super business angels. They kind of spread a lot of angel dust on like 50 to 100 companies they've been investing in. So you may not get as much mentorship as you think. And is it really the right timing? So I said, I'm your coach, professor, but as a coach, professor, it's you and your company and how you want to drive it. So I'm just giving you a red flag that you're a bit early, because I had told them that I think that if you fine tune and your prototype and have your second version prototype, that even if you go out on a platform of a crowdfunding campaign to get an idea of who your potential clients are, that helps to get better customer base. Your valuation, pre-money valuation, you can negotiate it better and justify it, and thus then why you could ask for less equity. And I said, but it's you guys to decide. So I was surprised, because these entrepreneurs, they're 22, 21, 22, 23. And at that time, I don't know if I'd be so strong to like refuse an investment or not with those super business angels. But they came to me, my students, and said, hey, you know what? We were thinking about it, and you raised some important signs to watch out for. So we're not going to take it. So I was surprised. I was like, gosh, these students, they're not going to take it. And I really didn't think that that I was going to have an answer as this. And so they decided that they were going to go to hardware accelerator to fine tune their next version prototype. And also with the Kickstarter, they decided to go on Kickstarter. Now, what was interesting was that they went on to Kickstarter, and they were just there to want to see what was their potential customers, like who would be interested, and geographical location, what locations geographically would be interested in the product, and not for the money. But it just so happened that, a success story in France was that in a week and a half, they raised up 1.5 million euro. And $1.5 million in a week and a half. And they came to me saying, hey, look, we got, €1 million, and we didn't even give any of our equity away yet. And so they were very happy. And then later they went to California because they had some help with Berkeley, because they found out on Kickstarter also that most of the UK and America were interested in their products. So they decided that they wanted to start commercializing and all in the States. But where they were happy was also is they said that, okay, we can now we don't have to give any equity. We can put some things into place, but also is that we can later justify the valuation because we have a workable prototype. We show the potential customer base, our clientele, the IP, more of a chance of having IP. So this is where, by showing all of these factors, this gives more justification of why you can ask for a lower amount of equity. Just to give an example too, is that, you would see like on Shark Tank, Dragon's Den and stuff that, you know, quickly when they're thinking, some investors, you know, before going through really major calculations, but just to give an idea, that's why, for example, if you were to say in your investment slide that we're looking for, that we were looking for example, 200,000 for 10% equity, right away we say, okay, that's basically meaning 2 million. Okay, how does this entrepreneur justify that his company is worth 2 million, you know, in a pre-money valuation? And that's where you have to kind of think yourself also, that when thinking about investment offering and stuff is, are you able to justify that? I mean, because, you know, do you have IP, a good IP strategy? Is your team good? Do you have good team members, advisory board of people from good, well-known companies? All of these factors that play in. Yes, Emmanuel, I'm going to just wrap up quickly, is when we were talking the financial milestones, that's why I was going into the, you know, the importance of the financial rounds. You want to show the previous rounds you've had, the presently what you're looking for, and also future. And please don't forget about future, because this is where investors want to see, you know, how you will scale up and really where you see this business going. And that's where sometimes entrepreneurs tend to shy away from showing those future rounds, because they think like, oh, if we already are asking for 1.5 million, and then we're saying we're going to need, you know, 3 to 4 million, you know, in the next rounds in a year and a half, 2 years, you know, that may shy them away from what we need here. But no, because for investors, they want to see actually that you have a coherent vision, that where you really want to go, what your ambitions are and expectations to get there. Things can change along the way, but what's important is being able to see that. So on your last slide, after showing, you know, where you want these future rounds, is really that investment offering, is to show that if you're looking for example, 200,000 euro, what are you using those funds for, which is very important. And especially with business angels, because it's not just finance, you know, business angels also want to know what is the, you know, like for even you, for example, if you're have a company that's like profitable with a social impact, you could be attracting impact investors. So then it's interesting to mention that, you know, you're looking for an impact investor, or for example, if you're in biotech or, you know, space, is someone that's within that sector, or someone in the marketing. But it's good to precise that, to show also that, you know, you're looking for a particular angel investor too. So I was giving you very quickly in a capsule, because, you know, usually my workshops are like 3 hours, where we also do interactive things. But I wanted to leave you with, you know, that elevator, you know, pitch formula. And I'm happy, Emmanuel can give my email if you want me to give you some feedback on it. You know, your 10-minute, you know, blitz presentation, and for investors.
Thanks, Audra, really thanks. And well, we are running out of time. Basically, we exceeded the time, our 1 hour. I'm sure the consortium will be a little bit surprised. But anyway, I think the topic is really interesting and really important. As you said, it's really, really difficult to concentrate key elements to share for entrepreneurs in only 1 hour. And moreover, you have a lot of case studies. Some of them are really, really interesting, and I always like to hear them. Do we want to stop here? Anyway, if you entrepreneurs, you want to leave, you can leave. You can watch a recording later on Galactica website. So please get in touch with us via social media, email addresses, whatever, to know more. Audra, if you have a few minutes, we can just answer a couple of questions from the audience. Maybe they are, well, there will be a lot probably. So if some of you would like to stay here just another few minutes, you can stay and write your questions on the chat, or simply let me know to unmute, or you can unmute yourself and ask the question. And follow you that doesn't want to stay because they have other engagements, we understand that, so you can leave. And that's it. Let's see if there are questions. Not yet. I will ask you a question, Audra, is about the competitive advantage. Quite often we hear that the competitive advantage is oh, we are the first in the market. We have no competitors, or we are the only one with this technology. And quite surprised that not really perfect competitive advantage, or not well explained. Do you have an advice on that? And if you have other wrong answers regarding the competitive advantage?
Well, yes, that's why I was saying that it seems to be, even to this day, with the amount of pitch training, pitch coaching, workshops and all, where, most experts, mention it's important to show your competitive advantage, secret sauce, uniqueness, is that it doesn't come out very well in the presentations. And that says a lot also about the entrepreneur not digging enough research. But sometimes for an entrepreneur, they really feel that they have their uniqueness, that there aren't other competitors out there. But what they tend to forget is that whether they're not direct and they're indirect, is that what type of companies are very similar to yours, where that with them having their own investment, how they can actually move into your territory actually pretty soon. And that's where it's important to be able to know how your strategy is on coming out with the first product, how you're going to develop it or fine tune it, moving on to product diversification. This becomes important. But when we say, competitive advantage, that's where it's really like, where is your secret sauce? Where is that secret, where are you in the market that gives you that secret spot? So it's important to really dig down on more research, because again, entrepreneurs tend to feel that if they're indirect and they're not actually doing exactly what they're doing, that they're not competitors. But actually, if they're targeting the same market and the same type of customers, and it may be, with a different product, but with them developing different products and services, if they feel that you're taking some of that market share, they might have investments within their company to be able to do the same. So that's where you have to know where some of these potential competitors can be.
Okay, thanks. Yes, indeed, a competitive advantage is another element about competitive advantage is if they can keep this, you can keep this competitive advantage, something that you can maintain. Because it could be really weak, your competitive advantage, but you can preserve your advantage for only a few months, maybe, or just one year, and then the competitor can replicate your solution, and you are, well, you don't.
And that's why also it's with patents. Sometimes don't ever forget that patents doesn't equal defensibility. Okay, patents can be good, a lot in the drug industry, pharmaceuticals. But the thing is, a lot feel that patents protects them from everything. But actually, for even someone in cosmetics, L'Oreal can add another, add a few things to the formula from your principal formula and say that they're different, and that's how they differentiate. So it's important to know that on your logo, on your branding, on your marketing, this is also what comes into perspective, within the competition. It's not just because, for example, some of you may know about Michel and Augustin. that started. They are like the reference in France for their cookies, and now started into chips and things. But when they came to our angel network, many thought like, well, there's so many competitors out there of cookies and Nestle and and all of these different brands. Like, why would people start eating Michel Augustin? But Michel Augustin was saying to them, it wasn't as much the innovative in their product; it was the innovation in their marketing. They were showing, that they're a dual couple. They did really good branding, and the cookies, were like pretty good. Probably if you went to your local bakery shop, the cookies could maybe even be better. But the thing was that the way they create a community of people wanting to have to create a community of people that like the brand, is that they ended up, some of the investors invested in Michel Augustin. Others cried that they didn't invest in it because they just took off, and I mean, they're everywhere, and they but even when they're at the supermarkets, they differentiate where, like, the way they're
like let's say the Nespresso, they place themselves differently. So
and the thing was, it's not like their cookies were really that much better, but it was in the marketing.
The product though is there.
Yeah.
Okay. If you have questions, entrepreneurs, please feel free. This is the time. Otherwise, this is kind of good opportunity to share your thoughts with Audra. If not, I think I have several questions I would raise, but I will let the audience to talk, and in case we can leave. Okay.
Emmanuel, just because I see there's like 23 people still there. Just to mention quickly too, is that when we were talking about team, a lot of the time you'll hear people say, okay, why 3 on a team? That's why
we didn't talk about that.
Yeah.
We had we had this. We can talk, or we can leave as a mystery for everybody. Let's see. Okay, audience, do you want to see why there are 3 people in the team? Let's see if they are active in the chat. Yes. Okay. Good. Okay. Good.
Okay. Why 3 is because, usually when I'm within my workshop, because I didn't have a chance to bring this one up, but participants will say, well, because, if you can't agree on certain aspects of the business, there's always one that's kind of like the mediator, and to help come to certain decisions. And yes, more or less, but the main reason for why we say at least 3 is because you have one that makes it, one that sells it, and then one collects it. So who is who makes the product, the chief technology officer, who sells it, the sales and marketing, and collecting the finance, who's managing. And if you have these main 3 principal ones, you can pretty much get by in the first 3 years with this team and having a good advisory board with other expertise in the sector and all. But this is why we say 3. And to also know that when hiring, we tend to hire in our own image. We tend to want to hire more like-minded people, but that's where you have to be very strong to know that when creating your team, you want to find someone that actually does think differently, has the same vision, but has a different way of approaching the business with their special competencies that you don't have. So that's where it becomes important, because we tend to like to gravitate towards like-minded people. And yes, when it comes to vision, but at the same time, if someone's very good at thinking out of the box and they're very much in creative strategy and they're doing things in a way that's very, complementary but different to you, that's where it's important that carries a strong team.
Okay, we got a question And regarding competitors, should we talk about the existing market solutions and also the upcoming competitors? Isn't it too much?
Oh, actually, I don't know who actually brought that up, but that's very good question, because yes, actually, it's good to show what the existing present, competitive landscape is. But actually, what's even better, and I'm actually glad that you actually asked this question, because investors, there have been some savvy entrepreneurs that, I think there was like 2 in the tons of pitching events I've been at and coaching, is that they had mentioned, the potential of upcoming competition, almost like milestones. And this really was interesting to investors, because they felt like, okay, this person really knows their competitive landscape. They know presently, who they're dealing with and how they differentiate from the present competitors. But for example, if there's indirect, and then some could be kind of moving more directly in the future, you're showing where, as you're developing and moving along in your company, how you can have like new competitors coming in the future. And that, again, you see, it shows, your vision, it shows that where you want to go, and even in a year, 2 years down the line. This is what actually, how would you say, because I don't like to use the word convince, but for investors, this is what really makes them feel actually more settled, that and safe, because they feel that you really understand what the competitive landscape is.
Yeah, maybe you are clearly in the pitch, you cannot go too much in detail.
And that's why in the pitch, that's why I say that you could have 2 good slides on the pitch, where you have one showing the competitive grid, and you see in just 10 seconds, we can see exactly how you differentiate. And then the next slide with your competitive axis, and then showing, those milestones. And if you make it very visual, and you're not going to be spending more than a minute and a half on the competition. But again, you see, competition is important.
Yeah, at least you show that there is a kind of need, a kind of market behind it. Otherwise, kind of an answer is we don't have competitors, and please don't say.
And the thing is, but what's funny is everybody here could say like, well, yeah, definitely, we would never say there's no competitors or all, but still the amount of pitching events I go to, this still happens even after people have been in workshops. So that's why I'm really today I was just really want to leave it with you. I want you guys all, when you're pitching, in a week or something, that you got great competitive landscape, which actually they'll just love your pitch, that they won't even have questions asked, because you just basically answered it in a short, effective way.
Yeah. Okay, Audra, we are really running out of time. I think we should organize another webinar on that topic, on investment readiness. Please, everybody, if you have questions, get in touch with the Galactica team, and either with me on eban.org website. I will be glad to share with you Audra's contact. And I think you can find, if you are quite good on search on the internet, you can find her email address quite easily on Bus Consulting. Correct. So thanks everybody for joining us. It was really great having you. It was really great, Audra, having you, and as a presenter, as always. You're always great, always insightful. And well, I wish you a great day, a nice day at home, probably. But enjoy your time with your loved ones. Bye,
Okay,
everybody.
thank you.
Thanks.
Bye-bye.